Going on, you curious cats? I'm going to speak a little bit about debt levels today, why I think there's a major debt bubble, and it looks like it's in the midst of bursting. This is kind of an orchestrated tactic by the banking cartel, in my opinion. I've studied markets for the last 2 decades, and what I've seen is they do this time and time again, and they use it as a way to basically steal our wealth and create a major wealth transfer from the middle class into the pockets of the rich. So the way they do this is they really push debt. So they convince us all that real estate's a sure thing and everyone should buy real estate, especially here in Canada. You can see it. I'm really a fan of looking at the charts, looking at the numbers. They don't lie. It tells us a lot of information. And what I've seen is that I think it's something insane. Like 60% of Canada's GDP now comes from real estate. And it just shows that all our eggs are in one basket. And everyone basically, like the general narrative in Canada was you can't go wrong with Canadian real estate. Everyone just said it's a sure thing. It's always going to go up. There's no way it'll tank. And I think people are about to see how wrong they really were. And the reason for that is that the banks promote this take on debt, buy real estate, buy these overinflated assets. And so everyone borrows money and they buy these homes that they're told can only go up, and they find ways to buy them. And basically, debt is the cheapest it's ever been to borrow. So they crunch the numbers and they're like, okay, I got to come up with 2,500 a month or 3,000 a month. So I'll just Airbnb this, and basically if I Airbnb it 20% or 20 out of the 30 days of the month, I can afford the mortgage payment. So they overextend and they buy this $1 million home, and they feel all good about themselves because they think they own this home, and it's all fine and dandy while they can make the minimum payments on the mortgage. But then what happens with something like this? No one takes into account the worst case scenario. And now you have economic crisis and we're all ordered to stay home, so no one's renting out the Airbnbs. How are you going to pay for this huge mortgage? So you've created fragility in your own life, and you haven't created resilience. You haven't created a safety net, and you haven't looked at the worst case scenario, and you haven't thought through fully and thought to yourself, how will I afford this if the worst case scenario happens? And here's the worst case scenario. So we have all these people that have really maxed out their debt levels, and now they're highly vulnerable to this market crash. And everyone's holding all this debt, and how are they going to pay it back? Right? We have no jobs. We're all being ordered to stay home. So a lot of these people, I was talking to people in Alberta, and their minimum payments were $20,000 to $30,000 a month because they have so much stuff. They live so excessively. They have a lot of them, there's 10 or 5 or 10,000 square feet homes. Who needs that much space for one little family? Like, it's just totally insane. And so these people buy all this stuff on debt, and they think it's going to last forever and the economy's going to boom forever. And then the tables turn and they don't have a job. Well, it doesn't take many months before you're bankrupt and you have to foreclose when your payments are 20 or 30 grand. So that's kind of maybe, an extreme case, but a lot of people are highly exposed to these debt markets, and now without having the jobs there to support it, a lot of people are going to be forced to liquidate. And the other thing that's happening is a demographic cycle. So we kind of have all these cycles that are all coming into play all at once, and it's kind of the perfect storm. So the demographic cycle is the baby boomers, who are they're basically the most prosperous generation that ever has passed, who's ever existed, and they've accumulated the most amount of wealth out of anyone. And so they're the ones holding a lot of this real estate, a lot of the stock market, and they're holding all the wealth. But now what's happening is the governments are devaluing the currency, the stock market's crashing, and real estate's about to tank. So all these assets that the boomers are holding are all starting to depreciate really quickly in a deflationary period. And these people are, everyone's going to retire and fund their retirement. and all of their money, their so-called wealth that they thought they were holding, is just disappearing. And things are, now they have to fund all this. So they're going to be forced to liquidate. A lot of them are going to be downsizing. They're going to be selling those, third and fourth and fifth home that they own to fund their retirement. And they've been told that their houses are worth, 1.5, $2 million, whatever. So they think they're so wealthy. And so they've actually gone and even taken out more debt, because on paper they think they're so wealthy that it's kind of been a way for them to justify taking out even more debt, becoming more vulnerable. And now everyone's going to go to sell at the same time. All the people that were holding too much debt are going to be forced to liquidate. They're all going to be selling. And then all the boomers that are looking to fund their retirement are also going to be selling. So that puts a lot of downward pressure on the market, and they're all going to go to sell. And where's the buyers? Who are the buyers? The millennials? We don't have jobs. The jobs we have, people went to university, they got these degrees, they're holding all this student loan debt, and they come out of school and they find out they have to work at Starbucks and they're making $15 an hour because no one wants to hire them. There's no jobs for all these overqualified people that went to university. We don't need all these like crazy specialized professionals. We need farmers and we need tradesmen. And no one wants to do the hard work. They all wanted desk jobs and these fancy, exciting jobs working in labs and big corporations that really aren't providing any value. And everyone's trained up in that. You were lied to again. I'm sorry, you were duped. You're told to go to school and university, and that's the only way to get ahead. And now you're just stuck with all this debt. So the millennials are already debt-ridden. They don't have the jobs. How are they going to come in and buy your $1.5 million home? I'm sorry, but your home isn't worth $1.5 million. It maybe on paper it is right now, but in my opinion, we're going to have a deflationary period because there's just not the jobs to support these overinflated bubbles. It's the everything bubble. All the assets are so overinflated from the money they printed since 2008 that we've been overpaying for everything. And now that everyone's going to be selling, there's going to be a major deflationary cycle. We don't know how long it'll last, but there's going to be all this downward pressure on the market. And it's just a matter of where the money is going to come from. And really what it is it's a takeover. The banking cartel is going to come in and buy everything because they create the money out of thin air. They don't even have to work for it. They just pull it out, whatever, they create it. So they're going to come in and they're going to buy everything. They're going to own it all. They're going to take all your businesses, all your homes, everything. So that's why I've been an advocate of living within your means, living simple, keeping your debt levels to a minimum. I'm not saying that debt is always a bad thing. It can be used as a useful tool when used correctly to leverage yourself and to buy assets at the right time. But you have to learn to look at these cycles, and you don't want to be buying at a market peak, especially in a debt bubble, because all the assets are overinflated. So if you buy a house at $1 million and then it crashes, and now that house is only worth 500,000, but your mortgage is still $1 million, even if you go to sell, maybe you sell it for 500,000 now, but you still owe 500,000 after you pay the bank, right? You took out $1 million mortgage, you only got 500 for your house. You pay off 500,000, now you have no home, and you still owe 500,000. So that's the insanity right now. That's the pitfalls of buying at the wrong time. That's the pitfalls of assuming real estate is always an asset. You need to do the math, crunch the numbers. That'll tell you the truth. An asset's only an asset when it's cash flow positive. After you pay all of the expenses of owning that home, the mortgage, the interest payments, the maintenance, the property tax, all the bills, everything, then you have to look at how much money the property's producing, and it needs to be producing more after you make all those payments. Very few people are in that situation. Wise investors are, but a lot of people just bought these homes and they're just living in there with their family, and they just bought it because they wanted to own it. They felt they were entitled, and now they're going to be caught with their pants down because there's no way to fund that high of a debt level with no jobs. So This is an orchestrated plan. This is how the governments they promote these debt markets, and they get you all to overextend on debt, and then they crash the market and they come in and they take it all back, and you think you own your home, but you don't, unless you have the money to always be servicing that debt, or you have the money to pay it off in the case of a market crash. And so a lot of people will be shaken out of these markets. And in my opinion, the banking cartel is going to come in and take over so many of these distressed assets. So if we can inform ourselves and realize these tools that they use to kind of steal our wealth and how they're doing it, then we can find ways to maybe, you know, take advantage of these cycles and these tactics that they use to steal our assets, and we can try and kind of follow the way they do it. And so that's why I've been sitting on the sidelines. I'm waiting for the market crash, and I'll come in and buy when all the bankers are. I've been trying my best to accumulate money right now while things have been booming and put it into hard assets that are appreciating, so that when we have deflation and the prices come down on houses, I'll actually have some cash set aside to come in and buy that. Where most people are already fully overextended and all their money's been going into the debt right now, then when things crash, they have no money to buy these assets at discounted prices. So I'm going to leave it at that. I have some bacon on the grill here and my battery's dying. Just a beautiful day here. So again, thank you guys so much for your time. As always, I truly appreciate it. Stay curious, stay humble, prosper, stay healthy out there, guys, and enjoy your day.